Following on the theme of artificial intelligence, what's happened in the US market, particularly in 2023, has been the dominance of the so-called Magnificent Seven. And why have they done so well? Because all of them are positioned to benefit as artificial intelligence is adopted. And part of the reason that they dominated the market in 2023 is that at the start of that year, the general expectation was that the US was going to go into an economic recession, that inflation would stay high, and that interest rates would remain elevated and possibly even go higher. So investors gravitated to this handful of stocks on the theory that they would do well no matter what the overall macro environment delivered. Now, as we begin 2024, we're in a different place. The consensus is now for a soft landing. So while we expect the Magnificent Seven still to do well, we don't expect them to dominate the market to the same extent that they did over the past 12 months. We think the market will broaden out. And when we look at our earnings expectations in the US for this year, we're looking at 12% earnings growth. Roughly half of that comes from the Magnificent Seven. But fortunately, we see earnings growth coming from the remaining 493 stocks in the S&P. And we think in both the growth and value, you will see a broadening out and more companies and more stocks participating in market appreciation. I think it's also important when you look at the Magnificent Seven not to treat them as just one group and think they're all homogenous. We have very, very differentiated views on each one of those 7 stocks. And we look at them in terms of their fundamentals, both over the intermediate term and the longer term. And some we have big overweights to, and some we're underweight. And those positions can evolve over time depending on what happens with the stock price.